What's up, my people? My name is VKFX, and today's video I'll be talking about CRT, the candle range theory. The candle range theory, that is the CRT in short form. So CRT is a powerful approach that helps us to understand the market dynamics. So CRT is a three candle pattern that is formed. That means it is formed by three candles. So the first candle is called the accumulation candle. The second candle is called the manipulation candle, and the third candle is the distribution candle. So CRT occurs when the second candle, the manipulation candle, attacks the liquidity above or below the range high and immediately reverse. So meaning the next candle, the third candle, the distribution candle, will target the low or the high of the accumulation candle. So in short, have a clear definition of what I'm talking about. So CRT, as I have mentioned, it is formed. It is a three candle pattern. So the first candle is called the accumulation candle. The second candle is the manipulation, and the third candle is the distribution. And as I had mentioned, it occurs when the second candle attacks the liquidity above or below the range high of the accumulation candle, and immediately it reverses. So as you can see, this the second candle, this is the manipulation candle. It attacked the liquidity. It attacked the liquidity of the accumulation candle and reversed, closing inside the accumulation candle. So if the manipulation candle closes above or inside the accumulation candle, that CRT is valid. And so CRT can be invalid. CRT can invalid when the manipulation candle, this one, the manipulation candle closes above or below the accumulation candle. When this manipulation candle, it closes above or below the accumulation candle, that CRT is invalid, and it means the market continues with the trend. I repeat, when the accumulation candle, this one, when the accumulation candle closes below or above the accumulation candle, I mean when the manipulation candle closes above or below the accumulation candle, like this one, like that, that trade is invalid, and it means the market is continuing with the trend. So guys, that is all about the candle formation of the CRT. So the next step, I want to talk about the key levels, because you can't just go into the market, you spot a CRT and trade it. So there are various levels that support the CRT pattern. There are the various levels that support CRT pattern. So the first key level is support and resistance. Support and resistance. A support is a point where buyers are willing to step in and push the price upward. So we had a level here. but the buyers keeps on attempting that level and pushing up. So the buyers come to that level, they go up again. So this is the support. The buyers are willing to step into the market and they push the market upwards. So at this point, when the market reaches at the support level, there is a higher chance to spot a CRT. There is a higher probability to spot a CRT. So the first key level, I've said it is support. Support is the first key level. The second key level is the resistance. The resistance. It occurs when the upward movement is halted or reversed. It is a point where the upward movement is reversed. So we have that level there, but the market can't go further or beyond that level. So it keeps on rejecting on that level. It keeps on rejecting on that level, like that. That is the resistance. So at this point also, there is a higher probability that a CRT pattern can be formed, but I will show you using examples. So the next key level is the fair value gap. The fair value gap or the imbalance. The fair value gap or the imbalance, it is the space that is formed between two candles. The space formed between two candles. So let's assume the market was on an uptrend like that, making higher highs. So that was the uptrend market. The market was bullish, and then at some point we had a fair value gap somewhere here. We had a fair value gap. We had a fair value gap there. So meaning the market will come to that to retest into that fair value gap, and then it moves, it continues with the trend. So meaning at that point between the fair value gap, there is a higher probability to spot a CRT, the 3 candle pattern. So those are the main key levels that you could spot. The next key level is the liquidity. The liquidity is where the price moves beyond the high or low of the previous candle. So let me just illustrate here. We had that candle, and we had like that one. So the market was on an uptrend. The market was on an uptrend. The market was on an uptrend like that, but the market reached a point where there was this liquidity over here. That liquidity, and I have said liquidity is where the price moves beyond the high or low of the previous candle and it reverses. So guys, the market was on an uptrend. The market was on an uptrend. The market reached here. Let me show you. The market came, it reached here, but instead of closing above that liquidity, it reversed. So that is basically what I'm saying about this liquidity, but I will show you using the examples. I will show you using clear examples. So the second step, after knowing what the candle formation and identifying the key levels, the next step is the time frames. So guys, time frames matters a lot, because you can't just get into the market and spot a CRT pattern and you trade, because many of you have been asking me about that question. So CRT, you can, the better CRT occurs at a specific time. So CRT occurs at, and be careful, be attentive on this. The CRT pattern occurs at 1 a.m. Eastern time, that is 8 a.m. Kenyan time, 5 a.m. Eastern time, that is 12 p.m. and 9 a.m. Eastern time, which is at 4 p.m. Kenyan time. So guys, every day at 8 a.m. there is a candle structure, a CRT structure that is formed. The same goes to the 12 p.m. and 4 p.m. and vice versa. What do I mean by the vice versa? You can still spot a CRT at 8 p.m. at night, 12 a.m. midnight, and 4 a.m. in the morning. So these are the key times that CRT occurs, the CRT kind of formation occurs: 8 a.m. in the morning, 12 p.m. and 4 p.m. So I hope you have understood about that. So now the next step is the time frames. How do you consider the time frames and the entries? So when you spot a CRT pattern on the 4 hours time frame, you are supposed to scale down. To the 15 minutes time frame for entries. And if you identify a CRT pattern on the daily time frame, you are supposed to scale down. To, let me just repeat again. When you spot a CRT pattern on the daily time frame, you are supposed to scale down to the 1 hour time frame for entries. When you spot a CRT pattern on the 1 hour time frame, you are supposed to scale down to the 5-minute time frame for entries. When you spot a CRT pattern, guys, when you spot a CRT pattern on the 15 minutes time frame, you are supposed to scale down to the 1 minute time frame for entries, guys. And when you spot a CRT pattern on the weekly time frame, you are supposed to scale down to the daily time frame for entries, guys. So that is how you are supposed to trade the according to time frames, guys. According to time frames, when you spot a CRT on the 4 hours time frame, you are supposed to scale down to the 15 minutes time frame for entries. When you identify a CRT formation on the daily time frame, you are supposed to scale down to the 1 hour time frame for entries. And when you identify a CRT pattern on the 1 hour time frame, you are supposed to scale down to the 5-minute time frame for entries. When you identify a CRT pattern on the 15 minutes time frame, you scale down to 1 minute time frame for entries. And when you identify a CRT candle formation on weekly time frame, you are supposed to scale down to the daily time frame for entries. Hope I'm clear, guys. So without wasting time, let me just show you an example of a candle range theory. So here, guys, we are on gold on the 1 hour time frame. So guys, you can see this candle here, this was our 5 AM CRT candle. I have said 5 AM CRT in Kenyan time it occurs at 12 p.m. It occurs at 12 p.m. So you just mark the CRT low on the previous candle and the CRT high of the previous candle still. So I have said when you spot a CRT pattern on the 1 hour time frame, you are supposed to scale down to the 5 minutes time frame for entries. 5 minutes time frame for entries. So guys, before I continue, after identifying your CRT pattern correctly, you scale down to the lower time frames for entries now. So there are different types of entry models. The first entry model is the order block. And the order block, it is the last up close or down close candle after sweeping the high or low of the CRT candle. It is the last up close or down close candle after sweeping of the high or low of the CRT candle. I will show you what that is. The second entry model is the fair value gap. It is the fair value gap, the VG, the fair value gap. The fair value gap. As I had mentioned, the fair value gap, what am I saying? The fair value gap, the fair value gap, it is the space that occurs in between two candlesticks. It is the space that occurs in between the two candlesticks, as in it is the short, as in it is also the imbalance. It is also the imbalance, guys. So the order block, there are many entry models, but I will mention them. There are turtle soup, the TBS, but I'll mention those one later. So let us go back to our trade. So after marking your CRT high on the 1 hour time frame and the CRT low, you scale down to the 5 minutes time frame for entries. As I have mentioned, the first entry model is the order block. It is the last up close or the down close after sweeping the high or low of the CRT candle. So as you can see, this is our order block because it swept the low of the CRT candle, and that was our order block. So that candle acted as our order block, and you can see the market retested on it and went upward, targeting our CRT high as the target. So guys, the first entry model is the order block, and the order block, we have said, it is the last up close or down close candle after sweeping off the high or low of the CRT candle. So we go back to the 1 hour time frame. So you can see this CRT was supported, guys. The CRT, I have said there are the various key levels that support the CRT formation, and the fair value gap was one of them. So you can see we had a fair value gap here, we had a fair value gap there, and still we had another fair value gap here, we had another fair value gap there that supported the CRT formation, the fair value gap. So the next key level, I said we had support and resistance, guys. So we had support and resistance, and we said a support is a point where the buyers are willing to step in and push the price upwards. So you can see here we had a support, and when the market came back on it, it formed a CRT. Actually, this is a double bottom. It is a double bottom, and we can see it formed a CRT candle formation. That was our CRT high and our CRT low and our CRT high, I mean. So after that, you scale down to the 5 minutes time frame for entries. You scale down to the 5 minute time frame for entries. So guys, that's all about the CRT. And so another thing, when you are trading the CRT candle formation, it is always advisable to mark the 50% of the accumulation candle as the first take profit, guys. You mark your CRT 50% accumulation candle as your first take profit. The reason is because the market can't, at some point the market fails to target the CRT high and it reversed immediately. It reached at the CRT 50% of the accumulation candle. So let me show you. After spotting and marking your CRT high and your CRT and CRT high, you are supposed to mark the 50% of the accumulation candle as your first take profits, like that. That is the 50% take profit, the 50% of the accumulation candle. The reason is because I have said in some cases the market fails to reach at the CRT high and it reverses immediately. It reaches the 50%. So it is always advisable to exit your trades when the market reaches 50% and you wait for a retest for you to place more positions, now targeting the CRT high. So guys, that's all about the CRT. If you didn't understood, you can reach out to me and I will direct you personally. How to trade CRT. And if you have not understood, I can still repeat all I have said. So guys, that's all about the CRT. So, and somebody had asked me, which session does the CRT candle occurs? And CRT, you can find CRT in every session. You can find a CRT in the New York session, Tokyo session, London, Sweden, all those sessions. You can identify and spot a CRT. CRT is one of the easiest strategy that I consider. I have various strategy, but I consider CRT as the easiest and the easiest strategy. The easiest strategy that I trade. So guys, a quick recap. I have said, when identify a CRT, you must consider, so you consider the time frames for entries and the time when the CRT occurs. I have said CRT occurs at 8 a.m. in the morning, 12 p.m. and 4 p.m. and vice versa, meaning you can still identify a CRT candle formation at 8 p.m. at night, 12 a.m. midnight, and 4 a.m. in the morning. So guys, that's all about the CRT. So I'll be making another video of my other strategy, the turtle body soap. So that's all for now. Thank you. If you have not understood, kindly reach out to me. I'll pin my WhatsApp number there. Some of you have it. If you have not understood, kindly reach out to me and you tell me how you have not understood, and I will repeat the whole process with you. Thank you.